Okay, well, unfortunately, what happened last week just happened again. Actually, no, even worse. I, I think the last time I did videos, it didn't pick up the proper mic, so my voice wasn't as clear as normal. This time, the mic wasn't even being used, so I did a whole video completely silent, which kind of takes away from the thrill of watching the video. So I am, for the second time, recording this video, this time with the magic of voice. So I'm going to recover this trodden earth that I've just been on and walk you through this chunk. So I begin with something that is not a chart at all. It's just a little musing about the incredible day that SMCI had. This is just an example option. The $820 put that expired on Friday. As you can see with the red rounded rectangle there, the option went from a nickel to $20. That is a 40x movement, if my arithmetic is correct. And that's a lot. I mean, if I can dazzle you with some more arithmetic, that means $1,000 became $40,000 from, min to max in the span of literally like a couple of hours. Because incredibly, when the PPI came out and equities slumped, SMCI just sort of rolled its eyes and kept going higher, which I figured was a sign of so much strength that there's no stopping it. It's like 1,200, 1,300, 1,500, because all it's done is gone up. I think it went up almost 300% thus far this year. In any case, it was a cataclysmic plunge in nominal terms. In day-to-day terms, it wasn't that big a deal. Friday basically sent the stock down to where it was like on Wednesday morning. It was really not any great shakes. But the option movement was incredible because when the stock was trading at 1,080, the notion that it would be trading at 820 at any point that day would be out of the question, which is why it was a nickel. So somewhere out there, well, the volume was pretty big, 11,000 contracts traded. So interesting that fortunes were made and lost on Friday, that's for sure, with this one stock. But anyway, let me go again through this first chunk of ETFs, and I will probably go to swift pace because I've did the damn thing already. I'm kind of sick of it. So we'll move swiftly. Commodities, nothing to say. And a lot of these, there really is nothing to say. The diamonds is kind of interesting, and this is a theme you'll see a lot, in which from Monday to Friday, there was basically no change to speak of. Monday was a lifetime high. Tuesday, we had our tumble. Partial recovery on Wednesday. Big recovery on Thursday. Slight diminishment on Friday. So net, here to here, basically, the week might as well not even have happened. You can see. I mean, you jump back to last Friday. Very, very little motion. Tremendous amount of smoke. No fire at all. But from a longer term perspective, we have broken this trend line, and we have established an anchor point in terms of the lifetime high, which we managed to stay beneath all week once that was established. So kind of cool. EEM, boring. EFA, even more boring. And, in as much as this blue trend line rules the roost, and we've been below it, for years here. So it's just, what else are you going to say? Long term, nothing's changed. FXI, illustrative of what happens when the government is impotent to push a market higher on a meaningful basis. It's basically crammed right up against that huge right triangle pattern once again. The miners bounced, but it's not going to change anything. They broke this trend line and had a big lift on Thursday and went up more on Friday. But this is just yet another of many little bumps along the way, as it's been sort of just slumping lower lows, lower highs. And the same can be said for juniors, like so. It doesn't change a thing. Gold itself is a little more interesting. It's been stronger than the miners as such, but it looks quite prone to topping out here. It's been for literally ever since August of 2020. It has been hemmed under that blue trend line. It sneaked above it just a skosh, but that did not last, and we've hammered out pretty impressive topping pattern right here. So I would say that precious metals are probably in trouble. IWM I've re-entered with a little trepidation because it's been annoyingly strong lately, but we are close to the top of this range, and so long as it does not surpass 206.56, that's okay. I've got actually a tighter leash on it down here at 205.49, a very tight leash, but that is the range that's been in place for some 2 years now, and the sine wave has still got a chance of working out in terms of time. There's still a possibility of that. Real estate, boring. We're basically right at the Fibonacci, like so. Just right there, bang, snore. IYT had been not cooperating in terms of Dow theory, because it was whereas the industrials were making lifetime highs, the transfers were making subtle lower highs each time until this happened. And so we cut through that trend line, and then a couple of days later, we cut above the lifetime high on the transports. So this is being more bullish, although it looks rather long in the tooth, rather than an absurdly sharp rally there. KBE has been inscrutable ever since Yellen did her BTFP program, so there's really not much to see there. LQD, the corporate bonds, have finally slipped underneath support, and that is a good thing. It took a while. Weeks and weeks and weeks went by above support, but it's finally punched through it. That cannot be said yet for the municipal bonds. They're still holding their own above this dashed level. OEF, and this will be our last one. This is just a neat little channel. This has been in place for a couple of years, and we tagged the tippity top of that channel on Monday. And as with, as I was saying earlier, Monday to Friday, really no net change to speak of, but the channel is our guide, like so. Okay, hopefully the sound worked, so I'm going to say goodbye now.